we have more evidence Europe's biggest economy is losing momentum. German exports fell 1.2% in June as the sovereign debt crisis saps demand for goods. Domestic demand fared a little better. Imports rose 0.3%, though that's some way short of the previous month when they climbed 3.8%. Let's get some insight into all of this with Bob McKee, chief economist at Independent Strategy. Bob, good to see you. What do you make of those German figures, first of all?
Well, the export figures in Germany have been very volatile, so it's difficult to judge month to month, but they were certainly a lot down further than I think anybody else expected. Probably a flat figure would be more expected. And we're seeing a growth rate for the exports of around 11% up to now, but this suggests that it's beginning to slow. And that's been the real driver of German growth over the last 2 years. The key has been their ability to export highly manufactured, high-class goods around the world when domestic demand has been relatively weak. So if we're going to see a slowdown in exports, partly because of the slowdown in global growth, and partly perhaps because there's a bit of exhaustion on export growth, then that suggests that German growth as a whole is going to slow over the next period.
And let's take a look at China as well. We had those inflation figures. You know what? I've been at Bloomberg for 3 months, and for the past 3 months, whenever I've done an interview on this, virtually everybody has said, you know what? Inflation has peaked, inflation has peaked, inflation has peaked, and it still has not. Has it now?
Well, I'm not sure. I heard one of your commentators earlier this morning say exactly the same thing, that this is definitely the peak, and by the end of the year, we shall see a gradual reduction. As you know, the figure of 6.5% is way above what the government wants. It wants a 4% target. If it's worrying, although a lot of it is food price driven, nevertheless, there is some core inflation in there, which is making it difficult for the government to meet its target. So it's looking maybe at having to raise interest rates yet again.
Well, it doesn't have a lot of wiggle room as far as monetary policy is concerned. What about changes in fiscal policy? Is that a new direction that they could go in?
Well, they've got a problem there as well, in that they want to keep the economy moving forward, to provide fiscal restraint as well as more monetary restraint, risks driving the Chinese growth rate down more sharply than they want. We know it's growing about 9%. If we get down to 5 or 6%, which would be the danger of a bubble bursting in the property market and elsewhere, then they can't really generate enough jobs for all those peasantry coming into the city. So that's a 5 or 6% rate in China is really the bottom line.
And what sort of growth concerns do policymakers have? And especially, have they particularly factored in the external effects, headwinds that are heading their way that have taken a lot of people by surprise?
Well, I don't think they have. Clearly, the comments made by the Chinese government about the US Treasury position recently and the debt ceiling impasse, which worries them because they hold so much of US Treasuries, suggests to me that the Chinese government is very concerned that global growth will damage their export growth, which we'll see with later figures today is really what drives the Chinese economy forward. Fixed investment at home and export growth, really not much domestic demand or consumer spending, and until they can change the mix of their economy, they're not really balanced enough to avoid the headwinds globally.
That said, when you look at China and when you look at Germany, are they really only the two bright sparks in a really rather dark world?
They have been up to now, and they've been based on export growth, investment, productivity. Now, if they're going to find it more difficult globally to grow in that way, they're going to have to rebalance their economies a bit, and that's not going to be easy, particularly in the case of China, where interest rates are on the rise.
OK, Bob McKee, really good to talk to you. Thanks for joining us here on Bloomberg Today.